What's up, family? Welcome to yet another valuable video. Today we're gonna be on the markets on Nasdaq, and I'll be showing you a swing strategy that I use on my day-to-day. And of course, this is gonna give you a wonderful risk to reward ratio, a higher risk to reward ratio. For those who don't understand what swing trading is, there are two schools of trading. Rather, we have swing traders and we have scalpers or day traders. Swing traders is a trader that relatively trades from higher time frames, as of the H4 daily all the way to the monthly. So they swing trades and they close their trades after 1 day of holding, or it can be even be weeks or days. We're gonna be going into a more of an intense, rather, where you can be holding for weeks or even days or months. As long as you have the patience, this is gonna be for you. I am gonna post an intraday Nasdaq strategy that you're gonna take advantage of, but this video is clearly meant for those who wanna collect pips, especially in 2023, where we're gonna be starting off the year. This is gonna be a good place to actually watch that you may get those long-term trades. So we're gonna jump on the screen after this intro. Okay, family, so as you can see on the screen right now, I'm just gonna lay out for you a way that I want us to do. Okay, so we're gonna be using the higher time frames. I'll go into the higher time frames right now, but it's very easy to actually kind of swing trade because structure is quite visible and clear to the eye. So we want the markets, we want bearish markets, we want as well bullish markets. Okay, that's what we simply want. And of course, if you haven't went to my Smart Money Trader free course that I have, go watch the whole watch list or playlist where I break down concept by concept. And of course, there are three types of entries that we look at. First of all, of course, when we are having a bearish market, we are in a supply market. That means we either can have supply from either here when the market gets to turn around, which is our higher low, okay, or rather our lower high, before you guys persecute me. Then of course we can also have it at the next lower high, or we can have it in between here. So in between the impulse, we can also have other supplies in between, and that's the very same thing within here. We have higher highs and higher lows. Therefore, at the higher lows, that's where we may be looking at getting our demand, because when we're in a bullish market, we are in a demand market. When in a bearish market, we're in a supply, and also can be as well in the middle. Now I'm going to teach you three entry styles. It's either supply and demand, or we can have simple break and retest, where the market, since it's in a downtrend, we have a bearish order block right there, and of course when the market comes back to it, we sell. It can also be a confirmation where it's filling in an imbalance together with that last lower low, where the market sells from that. Or we can still have the market coming back to supplies to fill that and come back all the way down. I'm just gonna be covering the strategy. I'm gonna shoot straight to the strategy rather than teaching you what is a supply or demand. If you wanna know about that, go to the free course. If you still don't know after watching the free course, our mentorship is available, the paid mentorship. But I want you to go through the free one so you can realize the value that we offer, okay, before investing yourself. Now, let's go ahead to clarify this whole concept, and we're going to be looking at two trends, a bullish market and a bearish market. Now, I want us to be taking, areas, or rather our perspective, from a monthly time frame. What do I mean by that? And I said it's going to be quite relevant as you start the year. So your perspective or your bias is what really, keeps you on the right side. For example, as you can see, since the year, or rather since we started the year, the market has been trending down, or has been a bearish market. We can clearly see this even from my market focus that I've done throughout the year. I've been saying the market, it's selling throughout the year. It's going to be selling. And of course, this kind of gave me an overall bias of what I expected, even as an intraday trader, right? But now as a swing trader, you're going to look at it different. You can probably now take a move You don't have to highlight it, but we can clearly see that, okay, this is the area, and I believe up to this areas we can see up to next year where the market, we can see it actually coming back into this area. So you can set, I'm just gonna take my high, okay, and I'm just also gonna take my low. There we go, to where I actually anticipate the market would be. Now, since you have a bearish market, you want to look at the behavior of the structure. So we're going to go on the weekly time frame, and you're going to start plotting your bearings. So what do I mean by your bearings? Everything to do with technical analysis or smart money. Okay, so this trading edge, as I said, it's not meant for only smart money traders, but it will be an advantage to you, especially when it comes to your risk to reward ratio, that you're a smart money trader. Now, as I said, you want a clear trend, and of course a clear trend in this case, we do have the market being bearish with lower lows, lower highs, lower lows, lower highs, lower lows, and it looks quite clearly that the market is creating a lower high in order to start selling the market. Impulse pullback. So in this case, what you ought to do is you want to just look at simple structure. If you're a beginner and you want to really master trading long term, or higher time frame or swing trading can be the one. So what I want you to do as you get into higher time frames, or rather with this swing strategy, is you always want to look for a change of character to confirm that, of course, the market has changed direction, or to confirm your bias from that monthly time frame. Now that it has done that, and of course, probably, let's say we're here, but let's say because of the ability of hindsight, we can already see what happened in the market. That's all right. I'm going to use it as an example. So we can clearly see here, as the market broke this change of character, I want you always, as the market does that, that impulse move that breaks that structure, you want to take it with your Fibonacci and take it where the market starts pulling back. So we can see this is where the market started turning around. Okay, let me just take something here. You will see this is where the market started turning around. This was the last higher high, and we have our higher low, and of course a higher low, because it is not yet proven, in fact, that the market is in a bearish trend. But since we have this, we can safely call it a lower low. Now, when you put your Fibonacci, you have what we call your discount. So this is a line. You have your discount, which is bearish market. Under the 50, you have your premium, which is under or above the 50%. You're gonna only take trades that are above or in the premium market. Okay, let me just go back there. You're only gonna take trades that are in this area right here, because this is where our 50% is. So if the market comes back and starts turning around, that's where you take your trade. If it turns around below the 50, then it's not quite a safe trade to take. You may just be scalping. But if you are a swing trader, you want exact entries, because if you mess up on an entry, you might need to wait for other weeks and months in order to get that entry. Okay, I hope I'm quite clear with this. Now we can see with that premium market, as it separates there, we have this premium market over here. You're gonna look for every entry type that I talk about. So in this case, what did they say at the beginning? We either, if it's a bearish market, we have what we call supplies, or we have order blocks, or we have break and retest. In this case, we have passed that. Therefore, we've went into this premium market with what we call a POI, or you can just refer to it as a supply. I can highlight the full range of that candle, and as we can highlight the full range of that candle, you want to make sure you cover it. If it's a candle, or just even if it's a supply, in fact, also this choppy markets here are also supplies. If you do watch my supply and demand video, I do highlight how to highlight your supply and demand accurately. So as you can see, you take that POI, as the market taps into right into that candle, that's where you're gonna take your trade. Let me just take my arrows. That's where you're gonna take your trade, and of course you're just gonna put your stop loss just above the wick of that candle right there. So let's say you're entering on this, it closes, you're just gonna put it above that. So as we take our short position and just show you what do I mean, let's say you entered right as it touches there and you're seeing the market is rejecting, you just want to put it at least above that wick. Okay, you can put a reasonable amount for yourself. I'm not gonna zero in much on stop losses, but I'll normally just put it at least 20 pips above the wick. So you can just take that and you just put it 20 pips above the stop loss. Okay, so we can go all the way there, just show you. There we go. I just need the points to go all the way. Okay, that's 10, something like this. Okay, something like this. This is quite reasonable. Now in terms of stop losses, because the market, take profit, because the market is about to create an impulse move, therefore you're anticipating the market is gonna give you a new lower low because you're in a downtrend. I hope you're being clear. So therefore what we want to do is your stop loss, you always want to at least target at least below the new lower low. If you're not comfortable enough, in fact this will be more pips or more than enough pips, you can take it at the last lower low that the market created. So at this point this would be your take profit. If you're confident enough as you're gonna back test this method, you can go ahead and place it on previous demand levels from the previous trend. As you can see here, that will be affecting the markets. I hope I'm clear, family. And of course the very same thing now continues as the market starts to pull back in. Okay, as you can see, we had that impulse, so we have what we call now lower lows that have been imprinted. Okay, what happens when you have lower lows? You go again and go into structure again. You gotta watch my smart money videos to understand what I'm now doing. And as you can see, this structure was broken as the market was creating a new lower low. So we have what we call a BOS, break of structure. So I just highlight it like that to just teach you guys. Break of structure, there we go. The market starts turning around, and as you can see it, you go to the previous impulse. So that impulse that you could have probably traded, you go all the way, okay? And as you can see, I'm at the 50%. I'm not sure if it's visible enough to the screen. You might just want to take your brightness all the way up. Okay, let me just do it again. So that is the 50%. And again, I said you're only gonna sell when it's in the premium markets. If it's here, this is not where you're gonna sell. If the market is turning around here, this is still under a discount market. That means discount markets, the market may potentially buy. It just may be a small pullback. So you want a reasonable pullback within the premium markets. Again, you're gonna look for entry clues with demand levels. We have supplies, we have break and retest. We also have fair value gaps. In this case, the entry, the entry catalyst here, it was a fair value gap. As you can see, there we go. So we had that candle pushing all the way down. We had this candle, but the market never came back to close that insignificant price, that whole movement right there. So when the market came back, we can see it went back in. And as it got triggered and starts to reverse all the way down, assuming that you started, entering your sell as the market closed that candle, again, you are gonna want to put your stop loss just a few pips above that candle. Again, you may want to take your take profit at least either here, especially if you're still back testing and you're still also boosting your confidence somewhere right here. I'm showing you real swing trading, guys. We are not talking about the 4-hour. That can still be intraday or day trading, right? This is real trading, guys. This is real swing trading. If you took pips all the way from right here all the way to at least that last lower low, that was gonna be more than 20,000 pips. Okay, that was gonna be 49 days on the markets. So you are gonna need patience, but I'm showing you this towards the end of the year so that you can start it in 2023. Those who are gonna be watching this in 2023, I believe you're gonna be killing the markets. You might wanna have another account for this strategy just to treat it as a long-term investment, right? It needs somebody who has that type of patience. Now let's go to a bullish market. Okay, let's go to a bullish market. How would I do this again? The monthly time frame. And of course, we do have hindsight, guys. I do understand. I'm just teaching here. But of course, you will understand very clearly as we start or as you go along with this strategy. For example, let's say this move right here. I'm gonna take that move. I'm just gonna highlight where it stopped. Okay, which was the high. Probably that high, as you're trading higher or you're anticipating the market to go higher, it wouldn't be there. Okay, so that's why we have that hindsight. Now we want to go all the way to the weekly time frame, as we said, and I just want to take what really happened right here. As let's say this was the live market and the market was presenting this situation. I'm just gonna want to go, actually this was 2020. Yeah, this was 2020 as the pandemic came in. We can see the markets actually starting to rally all the way up. I want to just go at the beginning of the year, because this strategy is quite good as you track it as the year starts. Okay, so there we go. This is February. Let's go to, let's see, Jan. There we go. So this is how the markets open, and it opened bullish. Now that it opens bullish, let's go into structure. Structure is king, guys. Structure will show you what we are doing. Now, because we have broken this previous higher highs, therefore that is a break of structure. A break of structure, as I've simply said over the years and over the times, it simply validates that the market is still going in that trend. So if it's a bullish trend, we're still anticipating it to go in a bullish direction. Okay, so in here, as you can see, there was a lot of liquidity. So I'm not going to go into a lot of smart money concept. I'm just covering this strategy. As I said, it's still relevant if you are another type of trader, a trend line trader or anything like that. You're gonna make it sense for you, right? As you can see, that liquidity was there, and the market came back to the last higher low rather, and the market started buying from there. But let's say, of course, that not many of us could have gotten that trade, right? Let's go again. The market gives us a break of structure. I'm just gonna draw the line right there. Okay, let me just draw it properly. I don't know where I'm rushing. We're gonna take our time to teach this concept. Okay, so we take that break of structure. There we go, BOS, and I'm just gonna zoom in more into this trend. As the trend breaks structure, now you want it, of course, you want any type of pullback. Now I have what we call a good strategy or good way to enter, especially as the market is in a very strong rally market. Okay, where you see that the market is breaking, or rather we call it small pullback, where the market breaks and closes with a candle above a recent high, and as it closes with that strong bullish candle, you can anticipate the market to still go higher. See, I'm giving you more secrets, guys. Now let's just trade this at the beginner level who is just trying to master the market. We have the break of structure. We have the market has recently broken structure. Even this are pullbacks. Now this is where you can now go to a daily time frame to kind of see structure a bit more visible. Okay, as sometimes if it does not imprint the structure that well, you can go to a smaller time frame to kind of really see. And as you can see, daily time frame, that's where we're going to be ending. We're not going all the way down. And as you can see, we have that pull, that impulse. We have a pullback, and as it pulls back, okay, as it pulls back, we do have the market coming back a bit lower there into touching that demand right here. So we have this demand, the market touches it and starts to create another impulse. And of course, as we can see, this impulse, it creates, we have a new break of structure again. Okay, so you could have rather now taken profit right there at the previous higher high. Okay, this would be a lot of pips, guys. Let me just come back and let's set our long position. Okay, assuming you've entered here, you want to put your stop loss right above, or below the wick in this case. Put your take profit somewhere right here. This could have been easily about 500 pips on Nasdaq. So you take that, we have the break of structure, the market comes back. Okay, let me just go again. So we have the break of structure, the market comes back or pulls back, and of course, where does it pull back into? It pulls back into a fair value gap. So this is what you could have done. You take that fair value gap and the market still continues to rally all the way up. With the break of structure, you continue the whole process. As long as the market is still trending, this is what you're gonna have to do. So I give you this assignment, I give you this strategy, freely given, I freely give you, right? So I want you to backtest this. We have the whole of December, and normally if you're a good trader or you want to improve yourself and you do not have a lot of time throughout the year because you have a day job, that's still fine. Most of the time, many of us, we do have free time this December. Invest in yourself. If it needs to be that you purchase education from any mentorship, it's fine. We are one of the best mentorships out here, right? Where we really empower you with the knowledge. You're more than welcome to come to us. As you see the value of what we offer, imagine how much more we'll be offering within the mentorship or paid mentorship. But with that being said, I want you to give yourself 100% as you close off the year. Many people start giving 100%, start want to build new habits as the year starts. Build it right now so that you have the mentality and the perspective that it creates a paradigm shift in your mind, that as you start the year, you know that you got that habits going. So go ahead, practice this, see how it works, and see how you'll take advantage of it within 2023 and even the years to come as well, because this strategy is quite relevant because we are on to structure. I hope, family, this video has blessed you so much. Make sure to subscribe to this channel, and of course this also works on any other pair. So if you go to any other pair like US30 or DEX 30, it's gonna work as well. We're gonna be going into synthetic indexes from Derive. We're gonna be teaching you how to make money throughout this December. So make sure to subscribe. More value is gonna be coming, more content is gonna be coming onto you. God bless you so much. This is your brother in the kingdom, Emmanuel Marker, and I'm signing out.